Hey everyone, I think we're currently living through a pretty extraordinary time in which the West is trying to decouple from China and lots of stuff is happening, and that's having implications on our portfolios in the end, of course. And I want to point out a couple of things here with the overarching theme that I think we are going into what we call a new world order, in which more countries will have a say and not just one country. And also I think valuations need to adjust accordingly. And I want to provide some examples here. So one is, which you can see here in one of my latest tweets here, you can see all those people lining up for buying the latest Huawei phone. The Huawei Mate has been released, and it's the first Huawei phone again that is able to have 5G download speeds. And as you may know, the context here, the US has sanctioned Huawei and its phone business for quite a while, and it seems that they have made substantial R&D efforts and breakthroughs that have enabled them to bring out a phone again that, despite sanctions, is having the capabilities that the US was trying to prevent it's going to have. Now, this is not the only example. There are countless more. For example, here posted another mass-produced 7nm semiconductor chip that is 100% made in China. By the way, this is about the car industry. It's one of the Geely subsidiaries and going into smart cars, as well as possible other breakthroughs, for example, in the area of scalable quantum compute. So these are very recent news that are coming out. And I don't want to discuss in depth like how much of that is already able to be commercialized or might be still 1 or 2 years down the line in the future or even more. However, I think we saw already this week in the stock market that this is having changes and that the realities have to adjust to this new world. So if you're just looking here at the Chinese market caps, that's combining all of the internet names, all of the Chinese big companies are currently equal to Apple in the valuation. So this is telling us that just one US company is having the entire market cap of those entire companies. And as you may have seen, Apple was getting a little bit of a shave off when we had the Huawei news coming out. And that's due to the fact that Huawei may now reclaim some of the market share which they have previously lost in China. And the bottom line here must be that the US sanctions haven't worked in the way that we hoped it would work, in terms of that this would prolong, let's say, the tech capability efforts of Chinese companies, and that would keep them out of adopting some of the latest tech. It's fair to say that the development of the Chinese companies is going quicker than we have thought, and that's despite the sanctions. And that possibly means that we'll see a couple of big changes in the area of semiconductors, where possibly some of the Western players may now face margin pressures and also more competition from Chinese players. If they are able to produce such new hardware, then this will have consequences also in some of these companies. And so the question this begs is whether or not we will see an adjustment in the market caps of US tech names. And that's unfortunately not very good news for, let's say, the big indices like S&P 500 and Nasdaq and so on, which are currently just carried by a couple of these names. And if they should correct for some sort of a new reality, then that might mean a downturn in some of these US names. However, in the last couple of months and years, we saw actually the opposite, right? There was a flight from Chinese equities and other risk assets into some of those big tech company names like Apple, Nvidia now recently, and so on. So usually it's not going in the direction that we get a more level-head playing field, but I'm arguing that over time we still should see an evening out, because this chart here, China versus Apple, is not only China versus Apple, it's also Germany versus Apple, it's also the rest of the world versus Apple. And I strongly believe that in a multipolar world in which tech capabilities, know-how, skills, capital, and so on are more evenly distributed in the world, it should actually reflect also in the stock prices. And I know currently there's a flight to safety because of interest rates spiking, because of all of the uncertainty and so on. This is driving people into those perceived less risky tech names by US companies, but also into the US dollar, and all of that having negative effects on China. But I think just like the sanctions didn't work out, I think also this flight of safety over the long run will not work out. Things need to find a balance again, and that's also why I think this is a multi-year, if not decades, of opportunity to invest in some of these rundown asset names. For example, Chinese equities, but also maybe risk or also emerging markets equities in general, because all of that has been really disturbed and is not reflecting reality anymore. And I think at some point this needs to reverse, it needs to even out. And so while it doesn't look at all right now that this is going to happen, usually that's exactly how it feels and when you're at the very top of a bubble. And so let me know in the comments how you think personally about that. Could Huawei and a new phone mark a new kind of a trend starting here? And also, do you really think that China can be held down economically and on the tech side due to those US sanctions? Have US sanctions backfired? I'm curious to hear your opinion on that. Thanks for watching. See you in my next video.